Have you ever stared at your trading screen, watching a position bleed red, and thought to yourself, why did I enter this trade in the first place? Perhaps you felt that gnawing urge to place a trade, any trade, just to feel like you're participating in the market's movements. That restlessness, that inability to sit on your hands, even when no clear opportunity presents itself. It might be the very thing destroying your trading account. Welcome to today's deep dive into what Richard Wyckoff called the most crucial element of trading success: patience, the one virtue that separates those who build lasting wealth in the markets from those who vanish before their first meaningful profit. But before we begin, please hit the like button and let me know where in the world you're watching from today. It's always fascinating seeing who's joining us from around the world. And if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. Has this ever happened to you? The markets are moving, volatility is picking up, and you feel that irresistible pull to jump in. Your finger hovers over the buy button, not because your strategy has given you a clear signal, but because you can't bear the thought of missing out. This is where most trading careers begin their slow death spiral. Patience. It sounds so simple, doesn't it? Yet it remains the most elusive skill for traders to master. Every trader believes they have it until the market tests them, until the tape slows down and opportunity hides. That's when the real challenge begins. When the screen stares back with silence and temptation grows like a weed in your mind. I remember when I first started trading, the idea of sitting there doing absolutely nothing while the market moved felt physically painful. I equated activity with progress. I convinced myself that if I wasn't in a trade, I was somehow failing. Every day without a position felt like a wasted opportunity. Stay with me until the end of this video, because what you're about to discover might completely transform how you approach the markets. Wyckoff understood something profound that most traders never grasp. The market doesn't reward action, it rewards correct action. And correct action often means waiting for the perfect moment, the perfect setup. Think about it. What if the most profitable thing you could do today wasn't placing a trade, but refusing to? And place one. What if your edge isn't found in your entry technique or your exit strategy, but in your ability to wait for the precise moment when probability massively favors your position? The impatient trader forces trades and mistakes activity for progress. They chase shadows instead of hunting opportunity. They react to every tick, every candlestick formation, every piece of news, exhausting their mental capital and eventually their financial capital too. The market has a particularly cruel way of punishing this behavior. It's almost as if it can sense desperation moving against the impatient with uncanny precision. And this isn't just theory. I've watched countless talented analysts destroy their accounts simply because they couldn't wait for their analysis to play out. If you found this approach to trading patience valuable, hit that subscribe button to join our community of disciplined traders who understand that true edge comes from mastering psychology, not just technical analysis. What's fascinating is the transformation that occurs when you finally understand that waiting creates wealth. My journey in the markets has revealed a hidden truth that contradicts everything the financial media wants you to believe. The greatest profits don't come from constant trading. They come from perfect setups. I still remember the revelation I had after analyzing my trading journal over a 5-year period. The results were shocking. Out of hundreds of trades, just seven accounted for over 80% of my total profits. These weren't random lucky strikes. They were trades where I waited patiently for all my conditions to align perfectly. Trades where I had the discipline to watch the market for weeks, sometimes months, waiting for that precise moment when my edge was at its maximum. This mindset shift changed everything. Instead of seeing trading as a daily activity that required constant participation, I began to see it as a selective process of finding the extraordinary among the ordinary. The impact was immediate. My account grew steadily rather than erratically. My stress levels decreased. I stopped fighting the market and started flowing with it. What Wyckoff understood decades ago, and what remains true today, is that patience isn't passive. It's not about sitting idly, staring blankly at charts. Rather, it's the most active form of preparation. It's the quiet discipline of studying, analyzing, and waiting for your moment while others lose theirs. This discipline of silence is perhaps the hardest skill to develop in our hyper-connected, instant gratification world. Most traders cannot tolerate the void between genuine opportunities. Their fingers get itchy, their minds start rationalizing subpar setups. They convince themselves they can outsmart time itself. The truth behind the scenes of successful trading is that the greatest traders aren't necessarily the ones with the most sophisticated strategies or the fastest execution systems. They're the ones who have mastered their own psychology, who have developed the rare ability to sit in stillness when the market doesn't offer optimal conditions. I've witnessed countless brilliant analysts destroy their potential because they couldn't handle the silence. They needed constant action, constant feedback, constant validation. But the market doesn't care about our needs for validation. It moves according to its own rhythm, rewarding only those who respect it. The journey to mastering patience begins with understanding your own triggers. What makes you jump into trades prematurely? Is it fear of missing out? Is it boredom? Is it the need to feel productive? Recognizing these patterns is the first step toward transformation. Now, I want to go even deeper into this topic by exploring the stark difference between the amateur and the professional trader. Because while the amateur reacts to every price movement, chasing the market's tail, the professional waits like a predator, conserving energy until the perfect opportunity presents itself. Type in the comments, "Patience is my edge," if you've ever experienced that inner battle between wanting to trade and knowing you should wait. The market is perhaps the most unforgiving teacher you'll ever encounter in your life journey. Unlike a mentor who might gently correct your mistakes, the market delivers its lessons through your trading account, through real financial consequences that can sometimes be devastating. This brutal feedback mechanism is particularly harsh when it comes to teaching patience. I've witnessed this revelation unfold countless times. The impatient trader is like someone facing a massive tidal wave, armed with nothing but a broken surfboard. They paddle furiously, expending precious energy, convinced they can somehow conquer a force infinitely more powerful than themselves. The patient trader, meanwhile, stands safely on shore, watching, analyzing, waiting for the perfect conditions before even considering entering the water. This mindset shift from trying to conquer the market to learning to flow with it represents one of the most profound transformations any trader can experience. Behind the scenes of every successful trading career lies this pivotal moment of surrender, when you finally accept that the market moves according to its own rhythm, not yours. What's fascinating is how this patience manifests in practical terms. Think of it as a coiled spring. Every day you spend studying the market without trading, every hour you invest in refining your analysis without taking action, you're compressing that spring, building potential energy. When most traders see inactivity, what's really happening is an invisible accumulation of power. I remember a particularly enlightening period in my career when I went nearly 6 weeks without placing a single trade. My colleagues thought I'd lost interest or courage. Some even questioned whether I was experiencing burnout. Little did they know that I was more engaged than ever, more present, more focused on the subtle shifts in market structure, volume patterns, and price action. I was waiting for what Wyckoff called the composite operator to show his hand. And when that moment finally arrived, when price, volume, and time aligned perfectly with my analysis, I struck with absolute precision and conviction. That single trade, born from weeks of patient observation, yielded more profit than dozens of mediocre setups could have produced. The hidden truth is that patience in trading isn't passive. It's an intensely active state of readiness. Like a predator in the wild, appearing motionless while every muscle, every sense is alert and prepared for the perfect moment to pounce. This state of heightened awareness combined with physical restraint is what separates the elite trader from the average. Most traders struggle with this concept because our culture has conditioned us to equate activity with productivity, movement with progress. We've been programmed to believe that if we're not doing something, we're falling behind. But the wisdom of the markets teaches us the exact opposite. Sometimes the most powerful decision is the decision to do nothing. Let me share how this principle transforms when we move beyond just entries into the equally critical realm of managing open positions. Because while patience is crucial for entering trades, it takes an entirely different dimension when it comes to allowing your winners to fully develop. Drop a comment saying "spring loaded" if you've experienced that tension between waiting for the perfect setup and feeling the pressure to be active in the markets. Here's a secret that rarely gets discussed in trading circles. Most traders fail, not because they lack intelligence or even a workable strategy. They fail because they can't endure boredom. This revelation may sound trivial on the surface, but it highlights a profound psychological barrier that separates the professional from the amateur. Boredom in trading manifests as that restless feeling when the market isn't providing clear opportunities that match your criteria. It's that voice in your head whispering, "Maybe this setup is close enough," or "I have a good feeling about this one." These moments of weakness represent critical decision points in your trading journey, where your discipline is truly tested. What happens behind the scenes is fascinating. Traders begin with clear, well-defined criteria for what constitutes a valid trading opportunity. But as days pass, without those exact conditions materializing, they start making compromises. They gradually lower their standards, rationalizing mediocre setups as intuition or reading between the lines. This subtle shift, this abandonment of discipline, is often so gradual they don't even realize it's happening. Subscribe to continue this journey of trading mastery with us, where we focus on the psychological dimensions that separate consistently profitable traders from those who struggle, regardless of their strategy. I've witnessed this transformation countless times, even in traders with exceptional analytical abilities. They start with rigid rules, but end up taking trades that barely resemble their original criteria. And when these subpar trades inevitably fail, they blame external factors, market manipulation, unexpected news, or bad luck, rather than acknowledging the true culprit: their inability to wait. Wyckoff understood that boredom isn't just an emotional state to overcome. It's a filter that separates those who have the mindset for trading from those who don't. The capacity to sit through periods of inactivity, to maintain your standards despite the psychological pressure to act, is perhaps the most reliable predictor of long-term trading success. This brings us to a deeper understanding. The market rewards patience because patience means control. It demonstrates mastery over the primary emotions that derail traders: fear, greed, and the constant need for validation. You cannot master trading until you've mastered yourself. This is the hidden truth that most trading education neglects to emphasize. Every price movement, every tick, every candlestick formation serves as a test of your composure. The market constantly probes for weakness, for any sign that you might abandon your discipline. It's almost as if the market has a sixth sense for detecting impatience, moving against the undisciplined trader with uncanny precision. What's truly remarkable is how this principle of control through patience extends beyond trading into every aspect of life. Those who can delay gratification, who can resist impulsive action in favor of strategic patience, tend to excel not just in the markets, but in their careers, relationships, and personal growth journeys as well. The discipline of patience doesn't just protect your trading account, it reveals your character. It shows whether you can stick to your principles under pressure or whether you'll abandon them at the first sign of discomfort. This inner alignment between your stated values and your actual behavior is what creates the foundation for consistent trading results. As we explore this concept further, I want to share a practical framework for distinguishing between patience and something far more dangerous that often masquerades as patience: hope. Because while patience is strategic and empowering, hope is emotional and destructive. Type "discipline equals freedom" in the comments if you've experienced the struggle of maintaining your trading standards when boredom sets in. The difference between professional and amateur traders becomes starkly apparent when you observe how they respond to market opportunities. Professionals possess what I call the power of waiting. They allow the market to come to them rather than chasing every movement. Amateurs, by contrast, are constantly reacting, jumping at shadows, and getting whipsawed by normal market fluctuations. I experienced this revelation firsthand while watching a particular stock several years ago. This company was building what Wyckoff would call a classic cause, a base pattern that was developing over weeks. The price action was choppy, testing both support and resistance multiple times. During this accumulation phase, I witnessed dozens of traders jumping in prematurely, convinced each minor breakout was the big one. Each time they were ruthlessly shaken out as the price pulled back. The transformation in my own approach came when I recognized that these premature entries weren't just random mistakes. They were systematic failures of discipline. Instead of following the crowd, I focused on waiting for genuine confirmation, increased volume on breakouts, tests of new support levels that held, and other signs that smart money was truly committed to higher prices. When that moment finally arrived, when price broke through resistance on massive volume and successfully retested the breakout level, I entered decisively with size appropriate to my conviction. What followed was a sustained uptrend that generated more profit from that single position than hundreds of smaller, mediocre trades could have produced. This experience crystallized a fundamental truth. The professional's edge often isn't found in superior analysis or exotic indicators, but in the mental discipline to wait for the new, highest probability moments. It's about quality over quantity, a mindset shift that goes against our natural desire for constant action. Consider the difference between hunting and chasing as a powerful metaphor for trading psychology. Patient traders adopt the hunter's mindset. They study their prey, understand its habits, position themselves strategically, and wait for the perfect moment to strike. They conserve energy, knowing that precision and timing matter far more than activity. Impatient traders, however, embody the chaser, constantly pursuing, reacting to every movement, expending enormous energy with minimal results. This fragmentation of focus is exhausting both mentally and financially. They chase shadows instead of waiting for substance. The hidden wisdom in this approach extends beyond just avoiding bad trades. It fundamentally changes how you perceive the market. Instead of seeing it as a chaotic environment that must be tamed through constant engagement, you begin to view it as a flowing river of opportunity where strategic positioning and patience yield far greater returns than frenetic activity. Building genuine wealth in the markets requires three elements that run counter to our instant gratification culture: silence to hear what the market is truly telling you, precision in executing only your highest conviction ideas, and timing that comes not from prediction but from patient observation of how price develops. Let me show you how this hunter's mindset applies specifically to market structure and why understanding the relationship between accumulation, distribution, and trend development gives the patient trader an almost unfair advantage in identifying high-probability entry points. Leave a comment with the phrase "hunter not chaser" if you've recognized yourself falling into the trap of chasing trades rather than patiently hunting for the perfect setup. One of the most profound revelations in my trading journey came when I realized that structure creates patience. This insight completely transformed my approach to the markets. You simply cannot wait effectively if you don't know precisely what you're waiting for. Without clear, defined criteria, patience becomes an abstract concept rather than a practical trading tool. This hidden truth explains why so many traders struggle with consistency. They claim they want to be patient, but they haven't defined what patience means in concrete terms. It's like telling someone to wait for the right person without having any idea what qualities that person should have. The ambiguity makes discipline impossible. Developing your structure, your specific, repeatable pattern, is the foundation of trading success. For me, that structure involves price action confirming a change in market phase, volume patterns supporting the move, and a favorable risk-to-reward ratio. When I clearly defined these elements, something magical happened. I stopped feeling like I was missing moves because I recognized that the market provides endless opportunities if you wait for your specific setup. This mindset shift is liberating. Instead of feeling pressured to catch every market movement, you focus only on the setups that match your criteria. The market becomes an endless stream of opportunities rather than a series of missed chances. The key is defining what your ideal trade looks like with such clarity that you can immediately recognize it when it appears, and just as importantly, recognize when a setup doesn't meet your standards. The journey to developing this structure isn't always straightforward. It requires introspection, testing, and refinement. You must discover which market conditions work best with your psychology, time frame, and risk tolerance. This self-discovery process is as much about understanding yourself as it is about understanding the market. But structure isn't only important for entries, it's equally crucial for exits. This is where many traders falter on their path to consistency. They develop the discipline to wait for the perfect entry, only to abandon that same discipline when managing the trade. The psychology at work here is fascinating. The same patience that guides a well-executed entry often evaporates once real money is on the line. I've witnessed countless traders grab small profits out of fear, cutting their winners short while letting their losers run. The exact opposite of what leads to long-term profitability. The emotional relief of securing a small profit overwhelms the logical decision to let the trade develop according to plan. This moment of decision, this battle between fear and discipline, is where trading accounts are made or broken. My greatest trades, the ones that truly moved the needle in my trading account, came not just from patient entries, but from patient exits. I've held positions through significant market volatility, through days when sentiment shifted wildly, because my analysis gave me conviction, and I respected the market's natural rhythm, understanding that price doesn't move in straight lines, that pullbacks and consolidations are normal within larger trends, allowed me to stay in positions that eventually delivered outsized returns. The authentic truth is that patience in trading is a holistic practice. It must permeate every aspect of your approach, from analysis to entry to management to exit. Each phase requires its own form of patience, its own structure, its own discipline. Speaking of structure, let me share a practical framework for developing your own trading criteria, a method for defining exactly what you're looking for so that patience becomes not just possible, but natural. Drop Structure equals freedom in the comments if you've discovered that having clear trading rules actually makes decision-making easier, not harder. One of the most profound revelations in my trading journey was learning to distinguish between patience and hope. They may appear similar on the surface, both involve waiting, but the underlying mindset creates dramatically different outcomes. This distinction represents a critical turning point for anyone serious about mastering the markets. Patience is rational. It's grounded in strategy, analysis, and evidence. When you're being patient, you're waiting for specific conditions that your testing has shown lead to profitable outcomes. You have clear criteria, and you're simply allowing the market time to meet those criteria. This waiting comes from strength and conviction. Hope, on the other hand, is purely emotional. It's what happens when a trade moves against you, but instead of following your exit plan, you hope the market will turn around. It's what makes traders average down on losing positions or ignore their stop losses. Hope is waiting without structure, without evidence. It's essentially waiting for a miracle. This distinction transformed my trading psychology. I realized that many times when I thought I was being patient with underwater positions, I was actually hoping. I wasn't following a strategy, I was abandoning it and replacing it with wishful thinking. The market doesn't deliver miracles, it delivers mathematics, probability, and human psychology made visible through price. The revelation comes when you understand that patience builds discipline while hope destroys it. Every time you abandon your rules and resort to hope, you weaken your trading muscle. Every time you exercise true patience, waiting for your edge, following your plan regardless of emotional discomfort, you strengthen that muscle. Now, let's explore another dimension of patience that Wyckoff emphasized: respecting the market's natural rhythm. Markets, like everything in nature, move in cycles. They have seasons: accumulation, markup, distribution, markdown. They have moods: trending, ranging, volatile, quiet. Each of these phases requires a different approach, a different strategy, a different kind of patience. I witnessed remarkable transformations when traders finally embrace this truth, and I've seen fortunes evaporate when they refuse it, when they stubbornly apply yesterday's strategy to today's entirely different market conditions. The market doesn't reward those who ignore its rhythm, it punishes them with brutal efficiency. Behind the scenes of nearly every trading blow-up is this same story. A trader who made money in one market environment refuses to adapt when that environment changes. They keep forcing the same setups, the same time frames, the same position sizing, even as the market clearly signals that conditions have shifted. This is where another counterintuitive truth emerges. Sometimes sitting out is itself a strategic position. There are periods in the market when the highest probability move is no move at all, when conditions are unclear, when volatility is excessive, when your particular edge isn't present. Preservation of capital becomes the primary goal. The discipline to recognize when to step aside, to acknowledge that the market owes you nothing and that opportunities will always return, is perhaps the ultimate expression of trading maturity. This perspective shift transforms sitting on the sidelines from feeling like failure to recognizing it as strategic wisdom. The journey toward this level of self-awareness isn't easy. It requires honest self-reflection about whether your waiting comes from sound strategy or emotional attachment. It demands that you develop the discernment to recognize different market environments and the humility to adapt accordingly. Write "patience, not hope" in the comments if you've ever caught yourself hoping rather than following your trading plan when a position moved against you. One of the most striking revelations I've experienced while studying elite traders is their remarkable comfort with doing nothing. This trait seems simple on the surface, but represents a profound psychological achievement. The best traders I've Known could watch the markets all day, analyzing, studying, observing, without placing a single order if their specific setup didn't materialize. This comfort with inaction runs counter to everything our achievement-oriented culture teaches us. We're conditioned to believe that success comes through constant activity, that results require perpetual motion. Yet, in trading, this cultural programming works directly against us. The elite trader has undergone a fundamental mindset transformation, recognizing that strategic inaction often yields greater results than impulsive action. What's fascinating is that this ability isn't about prediction, it's about patience. These traders aren't trying to forecast exactly where the market will go. Instead, they wait until enough evidence accumulates, until multiple factors align in their favor. Only then do they act. But when they do, it's with absolute conviction. This alignment of patience and conviction creates a powerful trading approach that few can master. I remember observing a legendary trader who would sit at his desk for days, sometimes weeks, without entering a position. To the untrained eye, it appeared as though he wasn't working at all. But behind the scenes, he was engaging in intense market study, building his mental database, preparing for the moment when everything clicked into place. When that moment arrived, he would deploy capital with a decisiveness that left others in awe. This comfort with doing nothing isn't passive. It's a disciplined state of readiness. It's the gunslinger who doesn't draw until the perfect moment, knowing that one precisely timed shot is worth more than a dozen hasty ones. This approach requires immense self-trust and emotional regulation, qualities that develop only through deliberate practice. Which brings me to perhaps the most important revelation. Patience isn't something you achieve once and then possess forever. It's a daily practice, a muscle that strengthens with use and atrophies with neglect. Mastering patience is mastering timing, and mastering timing is essentially mastering the market itself. Each time you reject a mediocre setup, each time you recognize the temptation to trade for trading's sake and resist it, you strengthen your edge. Each time you withstand market noise without reacting, you sharpen your focus. These small daily victories compound over time, transforming not just your trading results, but your entire relationship with uncertainty. The journey toward this mastery is ongoing, filled with setbacks and breakthroughs. There will be days when your patience wavers, when you abandon your discipline and pay the price. These moments aren't failures, but feedback, opportunities to recommit to the practice with deeper understanding. What Wyckoff understood decades ago remains profoundly true today. The market doesn't reward those who act first, but those who act right. And being right takes patience, the patience to wait for the perfect setup, the patience to wait for clarity, the patience to wait until the trade feels almost effortless because everything aligns so perfectly. Until that moment arrives, your most powerful position is waiting. Because in waiting, you become dangerous. You preserve capital while others deplete theirs on subpar opportunities. You maintain emotional equilibrium while others exhaust themselves on market noise. You build potential energy while others waste kinetic energy. And when your moment finally arrives, you strike with a precision and conviction that others cannot match. The question now becomes, how do we develop this patience in practical terms? What specific techniques can accelerate this journey and help us overcome the psychological barriers to disciplined waiting? Type daily practice in the comments if you're committed to developing patience as an ongoing discipline rather than seeking a quick fix for your trading. As we wrap up today's exploration of Wyckoff's legendary rule, I hope you've gained a deeper appreciation for patience as a trading superpower rather than just another skill to acquire. This journey of mastering patience isn't one you have to walk alone. Our community of thoughtful traders is growing every day, sharing insights and supporting each other through the challenges of market discipline. If this perspective on trading patience resonated with you, consider joining us by subscribing. Each week, we dive deep into these psychological dimensions of trading that most educators never touch, the real factors that determine your long-term success beyond just entry signals and indicators. The transformation we've discussed today doesn't happen overnight. It's a process, a practice, a journey of small daily choices that compound into remarkable results over time. If you're committed to this path of developing elite-level patience, leave a comment saying, "Patience is my edge now," so I can recognize you as someone who's serious about this deeper approach to trading. Your engagement makes these conversations possible. If you found value in today's discussion, a simple like lets me know we're on the right track with topics that actually matter to your trading journey. The principles we've explored today connect directly with market structure reading, which is where this patience gets applied in real-time trading decisions. There's a video right here on exactly how to identify the highest probability setups using Wyckoff's market structure approach. Click and continue the journey with me there, where we'll transform these psychological principles into actionable trading techniques. Remember, in markets and in life, those who master patience don't just preserve capital, they preserve something far more valuable, their peace of mind. I'll see you in the next exploration.